What's up everyone and welcome to the channel. Today I'm going to talk about 10 stocks that could make you a millionaire. But before we proceed to the video, don't forget to subscribe to my channel and like the video. We live in a fast-moving world where things change rapidly. Here, making money legally is the most difficult thing to do. We struggle all our lives to fulfill our needs and create wealth. Everyone wants fast money, and one of the amazing ways to do that is the stock market. One can invest the money into the stocks and get amazing returns on the investment. In these tough times, everyone wants to make safer investments with higher returns. This is only possible if you pick promising companies who have a competitive edge and work really hard to make profits. I've picked some stocks, which isn't a diversified portfolio, but I've studied and believe that these 10 stocks will totally outperform in this year and even in the coming years. The first stock in the list is iRobot. iRobot designs, develops and markets robots that help people complete tasks in dynamic real-world situations. The company's robots use behavior-based artificial intelligence systems to undertake complex tasks. iRobot is continuously developing new products and product accessories, enhancements and applications for its existing products. Over the past 7 years, iRobot sold approximately 5 million home floor cleaning robots. It is currently offering multiple Roomba, floor vacuuming robots and Scuba, floor washing robots, with varying price points and performance characteristics. The company is showing an impressive revenue growth. It has great scope of expansion because everyone is busy and no one likes to spend time to clean their house. So this year and the coming years are a great opportunity for iRobot to capitalize the market. iRobot should benefit from this industry growth because it's a first mover and a market share leader. According to the data from the company, iRobot has a 75% market share in North America, and excluding China, it has a 62% market share worldwide. So iRobot is definitely a great stock pick. The next stock in the list is Zillow. Zillow is an online real estate marketplace company that was founded in 2006. It is in the middle of massive transformation of its business and could disrupt the home brokerage market in the process. The application that has become synonymous with finding homes for sale and showing the value of homes that aren't for sale could soon be the biggest buyer and seller of homes in the country within a few years. Along the way, Zillow could change the way people think about buying and selling homes. In the first quarter of 2021, the company generated $701 million in revenue from selling 1965 homes. That's scratching the surface of the 243,000 homes sold, according to the St. Louis Federal Reserve. So the company has a lot of growth potential. In the long term, the opportunity will not be to expand the buying and selling of homes, but reducing transaction costs in the process. Selling a home can cost homeowners tens of thousands of dollars through brokerage fees, loan fees, upgrades, inspections, and much more. If Zillow can reduce transaction costs, it could both increase its own margin and be the best buyer in the market for homes. That would be truly disruptive to the real estate market and could make Zillow a great investment. The next stock on the list is Etsy. Etsy is an e-commerce company which focuses on handmade or vintage items and craft supplies. Through Etsy, sellers can sell their goods for a fee of 20 cents per item. The prices of the products are set by the shop owners, but Etsy claims 5% on the final sale price of each listing. As of 2018, Etsy connected 2.1 million sellers with 39.4 million buyers. In 2018, Etsy gathered revenue of $603 million and registered a net income of $41 million. Its share price hit an all-time closing high of $244 back on March 1st. Since then, the stock has tumbled over 30%. In a survey of customers who use Etsy's platform to buy and sell, 88% said that the company offers items that are not found anywhere else. That gives Etsy a competitive edge. Etsy trades at a PE ratio of 47, which makes it seem a little overpriced, but it has great potential in 2021 and beyond, as it has 40 million new customers since the start of the pandemic. So Etsy would definitely be a great buy. The next stock in the list is Airbnb. Airbnb has changed a lot of things in the tourism sector. Its business model is so different and unique that people are actually preferring Airbnb a lot more than the company originally expected. Travel and tourism is one of the world's largest industries and it represents over 10% of global GDP prior to the coronavirus pandemic. And Airbnb's business model capitalizes on this massive opportunity. It's a platform where hosts can monetize spare rooms or vacation homes and guests can plan trips. Guests can stay in the place of their choice based on the location. According to Brand Finance, Hilton and Hyatt are the two most valuable hotel brands in the world, and COVID-19 has impacted both of them to a far greater extent than Airbnb. The revenue of the company has been impressively growing, which is a clear sign that more people are choosing Airbnb rather than staying at hotels. In the coming years, tourism is expected to be the biggest industry with a global GDP of 15 to 19%, and Airbnb's future looks bright. The next stock in the list is Roku. With Roku's shares down by about 30% from the all-time high they hit earlier this year, it's a great time to take a look at the stock and attempt to invest. I really do mean to say that the world leader in media streaming technology strikes me as undervalued right now. Roku paid $100 million to acquire the content catalog of the shuttered Quibi, but it's making that deal pay off in a hurry. The debut of Roku originals, fueled by many Quibi shows and chapter-sized films and documentaries, is driving heady growth and impressive engagement to the Roku channel. So Roku is definitely a great stock pick. The next stock in the list is Teladoc Health. Teladoc Health is a multinational telemedicine and virtual healthcare company. The US-based global leader in virtual care, Teladoc, is where a doctor is just a call away. Founded in 2002, Teladoc Health is the largest virtual care company in the United States, serving over 170 countries with a portfolio of services including AI and analytics, telehealth, medical consultations, telehealth devices, and virtual care programs. Already a growing force, telehealth got a big boost during the coronavirus pandemic. The company is a leader in digital health, and its merger with chronic condition specialist Livongo signals its intentions to expand deep into the medical ecosystem. In the first quarter of 2021, the company's sales numbers continued to be impressive, with a revenue of $454 million for the period ending March 31st, rising by 151% year over year. That was so close to the top end of the guidance the company issued in the fourth quarter, when it projected that the first quarter sales would be between $445 to $455 million. And that wasn't the only projection the company beat. It reported 3.2 million visits in its forecast. It estimated a maximum of 3.1 million visits. Teladoc is a great investment that has a lot of potential. Research and markets project that the global telehealth industry will be worth nearly $192 billion in 2025. Roughly 5 times what it was in 2020. Its customer base is strong, and its US paid member count stands at more than 51 million as of March 31st, showing that more people are still signing up for the company's services, so it's definitely a great stock pick. The next stock in the list is Intuitive Surgical. Intuitive Surgical is the global leader in robotic surgery. Last year, the company held nearly 80% of the market share. The company sells the Da Vinci surgical system that's used for various minimally invasive procedures. The company's annual revenue has soared to more than $4 billion over the past 5 years, and annual profit has surpassed $1 billion. The company's earnings suffered last year as hospitals were forced to cancel many procedures to make room for coronavirus patients. However, this is only likely to happen during a pandemic, not during other market downturns. So I expect Intuitive to continue growing revenue even when the stock market crashes or economy suffers. The company recently reported an 18% increase in the first quarter revenue to more than $1.2 billion. The profit climbed 36% to $426 million. And most importantly, the company shipped 298 Da Vinci systems for a 26% increase year over year. New system orders are the key to maintaining Intuitive's market share. But system sales aren't Intuitive's only revenue driver. In fact, the company actually generates more money through the sales of instruments, accessories, and services. The next stock in the list is Tesla. We all know that electric vehicles are the future of automotive industry, and Tesla is the leader of the EV segment. With a market capitalization of around $800 billion, Tesla is the world's largest automaker by value. It is larger than Toyota, Honda, and General Motors combined. All of these companies manufacture their own electric and low-emission automobiles, but Tesla continues to be the dominant name in the United States. One of the biggest bright spots in Tesla's most recent earnings report was a record number of both production and deliveries. In the fourth quarter, Tesla produced 179,757 vehicles, an impressive 71% increase from the same quarter last year. Tesla had set an ambitious goal of 500,000 vehicles delivered by the end of the year. Even with the pandemic-related disruption on its production lines, the company came incredibly close, delivering 499,647 over the course of 2020. The management team at Tesla believes that it can improve on that and are promising 50% average annual growth in deliveries over the coming years. The next stock in the list is Amazon. Amazon is one of my favorite growth stock of all time for long-term investing. Shares of the company are up by more than 730% from where it was trading just a year ago, and analysts think the company has plenty of upside potential left to pursue. Give Amazon a high price target of $5,500 per share, which represents a potential upside of about 60% from the company's current share price. Amazon's diverse business strategy has brought it monumental success in any industry it chooses to expand into. From online retail to cloud computing to healthcare to grocery industry, Amazon's ability to attract new streams of revenue and seize market share in already crowded marketplaces has made it one of the most powerful companies in the world. E-commerce is another sphere in which Amazon is clearly an industry leader. According to eMarketer, in 2020, Amazon's e-commerce sales accounted for roughly 40% of all the e-commerce sales in the US. The company reported a 38% net sales growth in 2020 and its net income soared by nearly 84%. And in the first quarter of this year, Amazon's net sales increased by 44% year over year, while its bottom line jumped more than 220%. If you're searching for a stock that can help your portfolio navigate, regardless of whatever market conditions are lying ahead, Amazon's diverse lineup of successful businesses makes it an incredible recession-resilient play to add to your basket. The next and one of the greatest stocks on the list is Berkshire Hathaway. Berkshire Hathaway is an American multinational conglomerate holding company headquartered in Omaha, United States. The company has averaged an annual growth in book value of 19% to its shareholders since 1965, while the S&P 500 index, with the dividends included for the same period, has given a return of 9.7%. Berkshire's broad diversification provides the company with additional opportunities and helps to minimize losses during market or economic downturns. The company remains a broadly diversified conglomerate run on a completely decentralized basis. The company believes that under the supervision of Warren Buffett and Charlie Munger, it will continue to grow and give impressive returns to its shareholders just like it's been doing from the past 50 years. These 10 stocks have great potential to totally outperform in the coming years. We need to think in a different way and invest in companies which will sustain in the future markets. And I personally have added them to my basket. But before investing in anything, do consult your financial advisor. Thank you for watching the video, guys. Don't forget to subscribe to my channel and like the video.